Now, what does credit have to do with home ownership? Like, why is credit so important? Credit is the crucial role to home ownership. It is a financial snapshot that lenders look at. I call it your lifestyle report. It tells lenders what you do with your life, okay? How you spend your money, and if you even have the ability to pay the mortgage or to pay the bank back for loaning you such a large amount of money. It's the largest amount of money that you will ever borrow, right? So a strong credit score is going to open the door. You're going to get more favorable loan terms, and it's most likely how you get approved pretty quickly. Okay, of course, there's an income piece, and Brandon is going to talk about that income and debt piece. But as far as your credit, having good credit reduces costs when buying a house, okay? If you have some good credit, then you're going to get a lower interest rate. You can still buy a home with iffy credit or shaky credit, but it's going to lead to higher interest rates, or it may even disqualify you. So that's why we try to get your credit in tip-top shape in order to buy the home, in order to save you some money. Your credit history, it basically reflects, again, your lifestyle, your responsibility, okay? They can see, what type of credit card you have, what type of credit you are using. If you're only using that TJ Maxx credit card only, or that let me see, another store credit card, right? Then your finances are going towards clothing, shoes, all that good stuff. But if you have like a gas card, you're using your credit card to pay for gas and day-to-day expenses. Maybe groceries, Sam's Club, right? Maybe you're using it for groceries, or you could be shopping like I do, and buying other stuff that's same style. But lenders, they're going to look at the factors. They're going to look at your credit report, but more than likely, or more than anything, they're looking at your payment history, how long you've had credit, and your habits, how you're paying it back. Are you paying it back? Okay. Are you paying things on time? Are you keeping your balances low? Let's stop right there for one moment. A lot of people don't understand on credit cards, it's not that you have $1,000 credit card, $1,000 limit. I'm supposed to spend 900 and then I work on paying the bill. Credit cards, nobody ever told us that a credit card is really only 30%. If you want to keep your credit score high, you're only supposed to be using 30% of the limit. So if I have a $1,000 credit card, all I'm really supposed to use is $300. Every time I go to that $500, $600, $700, $800, $900 level or balance on those credit cards, I'm getting into a little trouble. If it's reportable, if it's the time that the credit card is reporting to my credit report, to the credit bureaus, right? So we want you to understand how to use credit, how to read your credit report, how to take a look at your credit report to find where you can make improvements. We're here to help you with that, but we're here to also tell you, and that 30% rule was my first tip and my first trick to raising your credit score.